Hello guys, welcome back to another video. Now it's time for a midweek market breakdown. So before we get started, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. We are going to take a look at some mixed pairs here. We've got Euro CHF, GBP AUD, AUD CAD CHF, as well as the Nasdaq 100. Now, very interesting situation that we got here on GBP. Let me just add it again. Is GBP JPY. So we believe, well, we know that there has just been an earthquake that was announced in Japan. And earthquakes normally have negative impact on a country's GDP because when there's an earthquake, it normally damages hospitals, schools, buildings, all of that. And as a result of that, people could potentially lose their jobs, and it's just very bad for that economy. So we can expect the Japanese yen to decrease in value over the long term. So let's jump straight into it with the technical analysis. Firstly, if we start on the monthly time frame, what do we have? Firstly, we can see how the market printed this impulse correction. We obviously expect that continuation to the downside. We can also see how the market had been stuck within this consolidation, and we can potentially see the market finally break out of that level over here. Now, if you take your Fibonacci from the low to the high, sorry about that, we can see how the market had tested and rejected the minus or the 38.2, giving us an indication that this upward momentum could possibly be expected to be quite strong. Now, from a weekly perspective, what do we see? Now, here on the weekly time frame, it's very clear the market is currently breaking up above the structure. Acted here as a level of resistance, broke above that, became support, support got broken, and level of resistance is also broken, giving us an indication that we can expect this bullish momentum to continue to the upside. Now, from a daily perspective, what do we have? Now, here on the daily time frame, we can firstly see how the market is about to print this W formation. Now, it's very important to see where this candle closed. If this candle does close with a wick equal to that, then we can expect the pullback first before the continuation. Alternatively, if the market does go higher and close above that level, we can then expect the market to print an overextended W formation and expect a pullback to the left leg before the continuation to the upside. But as it stands now, the market looks like it is printing a W formation. So we also have this massive impulse. After an impulse, you expect a correction, and the best way to measure the correction is by taking your Fibonacci from the low to the high of the impulse. And if you look over here, you can see the 78.6 is lining up perfectly with this level of support that got turned resistance, which the market had broken. We could potentially see the market pull back before that continuation to the upside there once again as well. Now, the best way to approach the situation is to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. Now, let's assume this market does reject that previous level of resistance over there. We can expect the market to come and complete this W formation. Alternatively, if this market go higher and we get a clear daily close and break above this level, then we can definitely expect a short-term pullback before the continuation to the upside there as well. Now, next up, we do have the Euro CHF. Now, starting here on the monthly time frame, what do we have? Firstly, we can obviously see how the market is currently testing the strongest support that it ever created. We had this massive liquidity week here in 2015, but in any case, so you can first see how the market is testing strong level of support. We can also see how the market is testing this resistance as well, because it's acted as a level of resistance, which now turns support, and the market is also testing support at that level there as well. Now, we could potentially see a pullback, or we could see the market go slightly higher before the continuation to the downside. However, because we are currently testing support, the best way is to look for a pullback before the continuation in the market. Now, from a weekly perspective, we can see over here how the market is currently breaking above the strong level of support that had been broken and has been tested as a level of resistance, and we can see how the market is about to break above that level. However, we do also have structure around this area over here, so it's very important that we do monitor this price over here. Now, we can also see how the market printed this overextended information. After an overextended information, expect to pull back to the left leg, which is exactly where the market is now. So we get to see what kind of price action we get around that level. Now, from a daily perspective, what do we see? Now, here on the daily time frame, the market is currently printing this weird W formation, and you know that once the market prints a W formation, you expect to pull back to the neckline. The market also printed this massive impulse. After an impulse, you expect a correction. Now, if you take your Fibonacci there from the low to the high, you can see how the 61.8 is lining up perfectly with this structural area that the market had created. The market is also currently testing daily resistance that was previously support. So we can definitely expect a short pullback in the market before the continuation to the upside, and hopefully the euro will regain the bullish momentum or get some gains there again. Next up, we do have Gbp Aud starting here on the monthly time frame. What do we see? Now, from a monthly perspective, this market over here is currently printing an overextended information, so we can expect a pullback to the neckline. But that's going to take a while because this monthly candle is still printing. We can see how the market is testing previous level of support. The next level of resistance is sitting at that level, so we can definitely expect a pullback before the continuation to the downside. Now, from a weekly perspective, what do we have? Now we can see on the weekly time frame how the market is currently testing the strong level of support that got broken, and it's now acting as a level of resistance. And we can also see how the market had printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. Now you expect the market to pull back at least to the 0.382, which is the first Fibonacci level that's lining up perfectly with structure. You also have to look at the Fibonacci that's lining up perfectly with the previous structure in the market there as well, which is an indication for the 0.50. However, we can expect a pullback to the 0.382, which is going to be our upside target in the market. Now, if you drop down on the daily time frame, what do we see? Firstly, we can see how the market had printed this level of support. Support got broken, resistance got broken, and the market is testing it as support. Now we can expect the market from where it is now to continue this move to the upside, to go and test the the 0.382. We could potentially see the market go even higher. So from here, we can expect Gbp Aud to increase in value or increase in strength, go hit the minus 38.2. We could potentially see that continuation. Alternatively, we can expect this market to continue higher and go and hit this target level over here. Next up, we do have Aud CAT. Now, starting on the monthly time frame, what do we see? From a monthly perspective, firstly, we can see this market had been stuck within a consolidation phase. Firstly, we can see how the market had printed the strong level of support. Support got broken. The market tested it multiple times as resistance. I can see that massive rejection that the market had shown over there. Now, one thing to keep in mind is that we also were stuck in this weird looking consolidation where that fake out, the market broke back into it, but we can definitely expect the market to continue to the downside. Now, I spoke about this pair on Sunday, and I said that we would like to see the market break below this level, and that is exactly what the market's currently doing. And if you have not watched Sunday's market weekly breakdown, I was speaking about this market when the level was sitting at here, and I said we can expect the market to potentially break below that level and then continue to the downside, as we expect the Canadian dollar to increase in strength there over time. Now, here from a daily perspective, what do we have? Firstly, we can see how the market printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse. Now, firstly, we can see how the 78.6 is lining up perfectly with that structure. We also have the 0.382 that's lining up perfectly with the structure that the market had created over here. This level over here acted as a level of resistance. Market broke above that, came to test it as support. Support did not hold, and all of that support is now being tested as resistance there as well. So we can definitely expect Aud CAT to increase, go and hit the 0.382 before continuing down to the minus 27 of the Fibonacci taken on that daily correction leg there as well. Next up, we do have CAT CHF. Starting here on the monthly time frame, what do we see? From a monthly perspective, we can see how the market is currently testing a strong level of resistance. This level over here in the market acted as a level of support. Support got broken, became a resistance, and the market's back to test it. We also have the confluence of the market potentially coming to print that W formation, but that's on a monthly time frame, and we don't have the time to wait for the monthly to close. Now here on the weekly time frame, it looks kind of like a graveyard because you got all these weak rejections in the market over here. The market had given us this impulse, however, the next level of resistance is sitting at that level over there. So we can definitely expect the market to continue higher first before the pullback and then the continuation. Now here on the daily time frame, what do we see? Now if you go back to the weekly to identify that level of resistance, what you have to do is drop down on the line chart, use an array tool, use a magnetic tool, then plot your level over there. We go back to the candle and then go back to the daily time frame. So that's the level that we can expect the market to go and test first. However, from a daily perspective, we have structure that the market had created over here. It gives us an indication that we can expect the market to potentially pull back from that level there as well. Now the market had broken first above this level, came back for the retest, gave us the continuation. Now the market had printed this impulse, and if you take a Fibonacci from the low to the high, we can see how the 61.8 is lining up perfectly with all of the structure that the market had created here. There's a high possibility for the market to pull back first before the continuation, so we can potentially see the market pull back first before rallying up, before continuing to rally to the upside. Next up, we do have the Nasdaq 100, starting on the monthly time frame. What do we see? From a monthly perspective, the Nasdaq 100 had given us an information, broke above level of resistance, tested as support, broken below support, tested as resistance. We can definitely expect this continuation to the downside to take place. Now from a weekly perspective, the Nasdaq broken below this level of support, came to test it as resistance. By doing so, the market had given us this consolidation phase that it had been stuck into. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, the market had not really moved this past few days. We can see how the market came in here on the 4th of March, and the market's been trading sideways. Now, we do know we've got the interest rate decision coming out tonight. Now, there's two ways for us to approach the situation. We're obviously not going to trade the news as it comes out, but if the interest rates, which they are going to hike, we can definitely see a liquidity wick to the upside for the market to go and grab all of that liquidity sitting at that level, because this level over here had acted as a level of support, became resistance. The market also has this potential of printing a W formation, which is considered a bullish pattern from a technical perspective. We could see the pullback, break below that, come for the retest, and then the continuation to the downside as well. Now, as traders, we have to be reactive, not predictive, and we have to learn to adapt to the ever-changing market environment. Scenario one would be for us to, because if you do look left, this was the area that the Nasdaq was consolidating in. The market can easily just when the news come out, just start to melt to the downside. The market would most likely go grab that liquidity before moving to the downside. Either or, the market's going down, whether you like it or not. Now that's all from my side. I want to say thank you so much for your time. Thank you for taking up the time out of your day to actually watch the video. If you do enjoy the content, please smash the like button for the YouTube algorithm. And as always, cheers for ears.